Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Monday, the 22nd of May. And I think after this, I think we only have 7 more days, trading days of May to go. So rapidly the month is starting to close. Don't forget we have Monday off for Memorial Day, so that's the reason too, because today's only the 22nd, but we lose a day on Monday. So risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer there. So some interesting themes of the day. I would call it a decent amount of rotation that we saw. And, some logical, maybe some not logical to you, but we will go through all the market moves because I think, nonetheless, there's definitely some trading opportunities, depending on how flexible you are. And really, that's probably something I would say is one of the themes of, what 2023 has been all about is basically staying flexible. Even if some areas of the market or some trades are not like your bread and butter or your exact setup. For me, I'm a trend trader and I like to stick to names above the 200-day moving average, but that hasn't been what, where there's been momentum all throughout the year. In fact, like today's a good example of that. A lot of names that have been beaten up, but they're starting to kind of make that level 1, level 2, move out of a sideways action, moving out of a base and starting to move back up. Now, that name or group may still be below the 200-day moving average, but it's, they're starting to make pretty aggressive moves from the lows. So I will talk about those in a second. I'll go through the regular indices very quickly, even though they're a bit boring, because the S&P was basically flat again. The good thing here is it's sitting above the value area for the month, right? So it is in that price discovery. However, I do have, of course, this trend line of the broadening formation, which I extended out at the end of last week, and we're still kind of held into that. And even if you don't have this drawn on your charts, again, this is just manually, I drew these dotted blue lines, but you could see from back into this this area, for some reason I can't see where the date is. There it is. But this was back in February. All right. So that's what we have for the week, right? As well, I get a lot of hints from the 1-hour chart or clues about, what the direction is. But again, it's a little bit boring, but we're above 4183. Could we come back and, could price come in and check that, check back to that? That would seem normal if there's some type of volatility this week, and that's the level that I would watch. But for now, that's a little bit a ways, so there's not much to really, not much significant on the daily chart for the S&P. The Qs, up 34 basis points for the day. That's not bad. We're coming closer to that 341.09 version point of control, which could be a place where you see some digestion. I would be watching for that. I think that's a nice place to be taking, some more targets, depending on where you are in your portfolio and what you're holding. And I see for the time being as well, so that's the resistance, short-term resistance level, and the support level, similar to S&P. We started the week above value, right? We get that value area, every on the 1-hour chart. It's for the whole week, right? And it's based on all of last week's price and volume activity. So the level there is 336.23 that we're above. All right. Small caps. Well, this is where it gets a little bit more exciting. Let's go back out to this daily chart. This did, it's been, I don't know if you want to say 1 step forward, 2 steps back, or vice versa with the small caps this year. But we know that we finally did make some headway here. Last week, we broke into the value area for the month. The negative thing was it got a decent rejection at the top of value. Today was a little bit different. We started, the small caps were leading into the open. We've seen so many times, like for example, on Friday, that it gets faded. And it managed to kind of hang in there for the day. Resistance watch is going to be 179.10, right? That's what we tested. That's also very, very similar to last month's top of value. Again, it's just crazy when you look at some of these charts and realize like we haven't gone anywhere. Sure, there's trading ranges and trades that you could do to both sides, but some of these areas of the market have been really challenging. And so 179.10 is very close to that last month's top of value. But here was a little bit of a shakeout, right? Right on the open, started to go higher, and it's like, oh geez, we're going to fade this whole move again. And buyers kind of stepped in, right around 10 o'clock, and just moves pretty nicely till about the high of the session was just about till a little bit before 3 o'clock, and then we gave back some gains. I mean, it could be too. Everybody knows that there's another one of these debt ceiling meetings that's happening at 5:30, and around and round we go with these guys talking to the press. Oh, we're making progress. We're not making progress. We're making progress. So it's a lot of drama. I think at this point, as somebody else said this on Twitter, I'm borrowing it from them, but geez, if they would just talk to themselves and lock themselves in a room rather than coming out and talking to the press. But they have to at some like a little bit be like enjoying this for the amount of press time that they're getting. It seems like this is almost like a ratings game. But anyway, I can go on and on about that nonsense. So what's kind of interesting is and this is really kind of the focus of this video is, what was outperforming for the day? Well, if you look at the IWO, this is not a chart that I bring up that much because there really hasn't been that much separation. The charts haven't looked that all that different. But IWO, it is kind of coiled up here a bit, right? So this is small cap growth, right? And we can look at small cap value too, but I think this has a chance. Even though it did not take out Friday's ugly candle there, but the bottom line is it's above 228.80, right? And I would say the other thing is it's also been moving above its 5-day moving average. So this is a good thing, and sometimes the candlestick patterns can look like one day can look very bad on a candlestick if you're looking for a pattern, but sometimes it's not that, and it doesn't change the picture. So for example, as ugly as this candle was on Friday, it didn't break the 5-period moving average. So the trend is kind of intact here. It's a little bit sloppy, but it's intact. So what I would be looking for is a move to 237, right? And also, right, you've got a level to, again, I like nice, easy trades, or where I know the trade's going to work and where I know the trade's not going to work. The trade's not going to work if it breaks back below into the value area for the week, which is 228.75. And you can also think about taking a target up here at 232.79. So again, using a little bit of multiple time frame analysis to go along with our volume at price analysis, and to see that there's some overhead supply there at 232.79 in the IWO ETF. Now, IWM is a little bit more complicated, right? This is value has the banks in it, so you have to kind of understand that that's going on. But look at the difference between the chart, right? It's not a chart that I really, even though this did well today, up 1.3%, I would rather be sticking with the strength than the weakness, right? That's how I trade a lot of things. I'm always going after the strength. I don't want the problem child. I want the strength. So again, above the 200-day moving average. All right. So next, let's talk a little bit about the rotation that we're seeing on the tape. We'll talk a little bit about the bad first, right? So this is where I think this tape really gets interesting. Look at what happened to the consumer staples today. They were down 1.5%. Decent volume too. I mean, you could see the staples don't move that much, right? It's very rare to see, you could look back, right? I think there was one move back in here, right? And then it kind of built from here. But the weekly chart was kind of revealing to me. This got rejected at the top of value. Noticed this a couple weeks ago because it was one of the sectors that was really outperforming. But, things like Pepsi, Coca-Cola, and a lot of other regular just consumer staple type names. But this to me says, like, if people are selling this, right, this has been a comfort trade, right? Things like that have really excelled in this environment. People want some defensive type stocks, but interest rates are also on the move again. And this group is they're not cheap. If you go through, so just looking at the Pepsi chart, for example, I mean, Pepsi has had a huge run, right? Look at what this did today, down 2.7%. And just by chance, you have to be realistic. It's Pepsi, right? They make chips, they make, bottled soda, right? They're not, they're not reinventing the wheel. They're still a very good company, right? And that's why people will probably come back into them, after a dip, and that seems to always happen in Pepsi and Coca-Cola. But you can see the PE is a 27. So again, they're not cheap. They've just been kind of hiding places. So I think this type of thing, to see rotation out of staples and into some more aggressive areas is healthy, right? And I know everybody has been talking about how the breadth has not been great in this market. It was actually pretty decent today, but I think it's quite normal to say, okay, we're going to take profits in an area that's really run up and allocate them to other places. That's actually very symbolic of a bull market, right? Is just a constant rotation, right? Groups, names go up, and then they see profit taking. They come back into support. They see buyers again, and they move back up, maybe make a new high, and then they see profit taking again. The home builders, this is a group that I've been all over the last, couple months talking about, that relative strength. But Friday, we got a bearish engulfing candle. And that was my clue to kind of get out, lighten up on some exposure. In fact, I took this off right at the end of the day. I wanted to see how it closed, but I'll take it for what it is. I'm not going to ignore a bearish engulfing candle that we saw on Friday, and sure enough, downside price action. So again, this is another group that's just been acting so well, really good earnings, but let it regroup a little bit, let it come into you. I got rid of Toll Brothers today too. I decided, because this one didn't have a bearish engulfing, but I got out of this one pretty early in the day, right? So that's kind of the key to, so why am I going over before, there's so many better things to be talking about, but I really think how you are managing trades that are starting to not work really is going to define your year. We said that a lot about 2022, right? How you define some of these trades that beginning to see some rotation out of, or if they have some bad news event, right? That's going to make or break your year, how you're managing your losers. All right. So it's just very important, about how you're managing your trades, especially because what I'm doing is mainly swing trading. So the big thing today was the outperformance in the ARK funds today. So of all this talk, you turn on the TV and whatever financial media that you listen to, you have a bunch of people who are critiquing mega caps. Oh my God, this move in the mega cap stocks. And I had the TV on today and I was listening to that, and they had a couple of people who I thought were just a little bit out of touch with the market. And they're like, wow, I was like, wow, nobody's talking about, what some of the rotation, like a little bit of rotation out of mega cap tech and into some of the smaller cap stuff, such as ARK. So, so you don't have to be in love with this fund. I don't really like the fund managers, how they manage the fund. That's okay, right? But it is symbolic for a group of stocks, and it's interesting to see what this group of stocks is doing, right? It retook the 200-day moving average, and just like we looked at the IWO ETF, this is the moving averages are all lumped up here. So I always in these ETFs like to go through and look to see what's the outperformers of the group. So if we do that for the regular ARK Innovation ETF, right, you can kind of go through and you could say, okay, what name really lines up in your system? And there's some interesting ones in here. CRISPR's one, for example, that I thought had a really good move, and then I think it pulled back a little bit. Let's see if Thinkorswim doesn't want to bring this up, but here was a move right up to this version point of control, kind of setting in here a little bit. We're seeing this pattern in a lot of strong earning names, right? Some digestion and then a move higher, right? So I think that's interesting. And then of course, this small car company, Tesla. Now this is a tough one because the chart has not been the easiest thing in the world, right? And we know on the weekly chart, right? I haven't talked about Tesla too much because it got rejected pretty firmly at the bottom of value for 2023. But sometimes these things, they like to try a couple times. So, if you're in a trade now, because Tesla really acted well on Friday too, the market was pulling back a little bit, but Tesla really wasn't moving, right? Usually when you see something like that, where the market's a little bit weak, or even the Qs were a little bit weak, but Tesla wasn't going down on Friday. And the same thing today, whenever the Qs caught a little bit of, like, I'm just looking at like the 5-minute bars, whenever the Qs started to kind of come in a little bit, Tesla wasn't. So there's buyers in this for now. Where do I see resistance? I don't see any resistance till 202.70, right? So the 200-day moving average, that's a nice little trade, right? Notice that that there was a virgin point of control in the 1 hour, so you could use that as your stop, right? It made it through this overhead supply, and 202's up here, so that's a nice little trade. That's $12 away, right? And again, it doesn't have to get there in a straight line, but I like this. And again, for me, I like to stick with names above the 200-day moving average, at least for this. I think it can, where to basically take it off, and that's 202.69, right? And if you're, a longer term swing trader, you can leave a portion of your trade on, but I think that's a nice, a nice place to target. So also, interesting that you go through their funds, right? The ARK FinTech. And I think we talked a little bit about this one in the weekend video too, but here's the base. I mean, this is, again, sometimes you have to cover up the symbol and say, would you like this chart? I like this chart, right? Look at the test of a couple times of the 200-day moving average, bounce, bounce, right? And now we're doing something different. We're breaking above this range, right? I think that's pretty cool. And here's the names. And so again, you could do the same thing. If you don't want to own the whole ETF, you could go through and you could see, Twilio came up again, that's been a hot stock. Same thing with Roku, same thing with a couple other names. Path, I was going to show you that chart, but it does report earnings this week, so you're going to have to mind that. But BILL had a good earnings report, right? So there's some, decent stocks in here. Again, Thinkorswim just doesn't, here again, a little bit below the 200-day moving average, but this is nice digestion. And if it wants to move above here, maybe, that's a nice little trade up there. All right. And then the last one is the ARKK, right, which was up 5.5%. Now, I don't like this one as much, just because it's already at the 200-day moving average. There's also a virgin point of control, which we don't know what it's going to do at that overhead supply. It could get faded, but bottom line, like, that's where the strength was today. Also, blockchain stocks, even though Bitcoin really wasn't a big mover, but other things like clean energy was strong today. And, I liked what the bios were doing today too, right? This has been fighting, and trying to make it above, this area of overhead supply that we were taking out, virgin point of control, and above the trend line. So, biotech putting in, again, you look at a day where the SPY is basically flat and biotech was up 2.5%, that's something to be said for that. That's really nice outperformance. I mentioned, here's every weekend I compile a watch list for members. Take a look at how this did. Again, I have some names left over from last week that I'm watching, right? But here's I actually added a lot of names for this week, because it's just some names I just really wanted to watch. It looks like Riot Blockchain, even it's kind of crazy. I know that this got some Twitter attention, but because usually this goes when Bitcoin goes. This didn't, but had a really nice move. We talked about this chart over the weekend, and nice bottled up here, and can maybe make a move to 1328 before it really sees any major resistance. So Riot Platforms, or it's not called Riot Blockchain anymore. I guess they changed the name, but again, there's something to be said about that chart too. It's a pretty strong chart. Shopify, this is one that I did take out of the watch list setups. I was actually in Shopify last week and I kind of bailed on it. It didn't act the way I wanted it to. So, that's a lot of times how trading works, is you try a name. If it doesn't do what you want, you can get out of it and you can always go back in, right? This stalled at this virgin point of control, but at least I knew where to take profits in this thing. And I did take a profit profit target, I think at 63.40. I actually took a few profit targets in this thing, right? Because I just know how SHOP trades, and sometimes it does do, you know, a bit of fading as soon as it hits any overhead supply. So SHOP. Oh, that's DraftKings. Yeah, so here it is, right? 63.30. I said 63.40, but 63.30. So again, like not the biggest trade in the world in terms, you know, made a couple bucks in it, but you know, that's what's nice in this market. You know, if you're day trading, right, you can find some of these things. DraftKings had a nice move. Again, a decent fade there at the end of the day. Again, that's why you kind of lighten up into strength when something gives you like an 8% move. You got to be willing to kind of take some profit. So I'm still wearing two of those trades, but after Shopify, I took 3 targets today, which is excessive for a $2 move, but you know, I feel more comfortable holding the last piece of the trade. DraftKings 25.60 is where I took a target today. And you know, a couple other things. I didn't take any targets in this one. It didn't move enough, but I like this LTH. It didn't get exactly where I need it to. I think we'll have to watch because I think not DraftKings, but Dick's Sporting Goods reports tomorrow. But this is another like leisure type company. So let's see if this one, remember, this is one that had good earnings and it's been settling back here. It just needs to kind of take that next leg higher. A few other names, Pfizer, right? Again, not a name that I've traded in a long time, especially in a downtrend, but I know where to take this thing off, which would be the bottom of value, 39.68. Nice little trade for the day. You know, hearing about they also have a treatment for weight loss, which is the hot thing right now. Anything else that I did? I did take off Uber. You know, again, I like to, you know, pick one of the trades. If I've got 3 or 4 trades working really well, I took off this one. Again, some of these names are just too much of a fade, and too much of, you know, this is too much of a move back. Right. Again, you could always get back into these things. So I where this thing closed at 39.10, I took the last piece off at 39.50. All right, guys. A few other names, I guess, that I think are interesting. Like Upstart's been, you know, such momentum in this name. It did take, I'll give you a nice level to watch here because it did take out a big level today. That's why I want to bring it up here. But it took out this VPOC. So again, it's made such a nice move, but really watch that overhead supply at 28.23. If you've been trading it and it's made this move from 15 bucks to 27, I think you got to think about putting that money in your pocket. NNOX had earnings this morning, right? This name had all kinds of momentum too over the last couple of weeks. But hey, I mean, it's managed to kind of reclaim this. And, you know, for a momentum name, you know, this is one that you could day trade too. As long as it stays above 1841, you know, it might be in play. A couple other things I noticed was like the payment companies as a group were pretty strong. Shift for Payments retook its 50-day moving average, right? I thought for some reason, sometimes I get symbols confused, but Square is something else to maybe keep an eye on. Maybe you can get out of that channel, 61.34. PayPal saw some option activity today too, trying to come off the bottom there. You know, maybe it works for another scalp up to the 20-day moving average. And last one I'm watching, the chips, I think needed a well-needed breather. Micron, you know, a lot of people talking about Micron. I don't trade Micron too much. It's memory chips. I think that there's more interesting semiconductor companies out there, but it held where it needed to. You know, 64 bucks is something that you could trade against. And if you like this name, you know, there's also 64 bottom of value, came right into the bottom of value with that pressure that China is not going to be using Micron chips, at least for the time being. But, you know, all the semis kind of sold off on that news. ACLS is a name that I didn't get. You know, I traded last week, had a big week in the semis. Of course, I had NVIDIA. I also had Broadcom, AVGO, and I also had Lime Research. So I took off all those trades last week. But I like this ACLS. It looks like it had a false breakdown, right? And is beginning to trend. You know, neat little consolidation here. So that's one we'll be watching tomorrow as well. Guys, have a great night. Check out TribecaTradeGroup.com. If you're not a member, hope to see you in the trading room bright and early tomorrow. Have a great night, everybody.